This Tuesday, Chinese Vice Premier Liu He chaired the 8th China-EU high-level economic and trade dialogue, part of the ongoing negotiations between the two sides. With isolationism on the rise in the U.S., sound trade relations between China and the EU can do much to shape the global economy. But what exactly can both sides do to promote recovery and economic growth? And in the middle of the blame game initiated by the U.S., will the EU take sides or remain neutral? To find out, we're honored to be joined today by the President of the European Union of Chamber of Commerce in China, Mr. JOERG WUTTKE. That's our topic. This is Dialogue. I'm JOERG. All right, Mr. WUTTKE, thank you for agreeing to the interview. Let's cut to the chase. The investment treaty between China and the EU. After 7 years, more than 30 rounds of talks, where we are now?
It's still quite a way to go. I think it really needs political support now, political willingness.
Is it the correct reading that Vice Premier Liu He himself is involved, saying much about the political will from the Chinese side?
I think he's getting into this. He was very busy on the phase one. Europe felt very much that the leadership in China was distracted by the U.S. Trade talks and now the trade war. But I think now there is an awareness that something has to be done, signed, sealed, delivered, and that's the possible opening we have right now.
Can you elaborate on the lengthy process? Why it took us so long, and what are the sticking points right now?
Well, it is unusual that it takes so long. I mean, trade negotiations are never easy. This is actually an investment agreement, so scope-wise it is much, much smaller. It takes longer because it's two different systems. I mean, Europe is rather on the open side, and China still has a lot of close quarters, state-owned enterprises, subsidies, and these are the stumbling blocks. I mean, you can see that Europe signed free trade agreements in the same period of time with Japan, Korea, Vietnam, Canada, and other places. So it is easier if you have a system to discuss with which is very similar to your own. So I guess to bridge that was a challenge and possibly might still be a challenge.
Yeah. But the problem is, do you appreciate the fact that China does have a different system, and its state-owned enterprises is not something that Europeans have back there?
Well, we have SOEs also. We have particularly in France and also in Germany, we still have state-owned enterprise, particularly in security-related areas. So we are not unaware of this.
Way.
Well, we privatized over the last 20, 30 years, and I think that makes a difference. And so in a way, definitely, we have to regard it as a fact that China had state-owned enterprises. But I mean, for us now is the point to say, how do we deal with these state-owned enterprises? Because it's one thing to have them just based in China. It's another thing if they go global.
Where do you think this negotiation is headed? Can it be wrapped up by the end of the year?
I can imagine both parties really put everything in it. And would be pity if they fail. The opportunity is there. Merkel has pledged that she supports it. Chancellor Merkel has the presidency of the European Union right now. So we have a political heavyweight at the top of Europe. And so the hope is still there, but boy, it's still a long way to go in a sense. But I think it really has to be concluded this year.
And as we know, because of COVID, a lot of person-to-person meetings between heads of states of Europe and China will probably hanging in the air. Do you think that will probably stall the process? Because usually we see the signing of the deal happening in the presence of heads of states and governments.
It helps to have this personal chemistry to meet and have offline phone talks on the side, to have a dinner as friends in order to talk about difficult topics. And then, of course, for China now it's even more difficult to negotiate it because they are in a trade war with the United States, a ferocious trade war. So whatever they give to the Europeans, the dangers, of course, this will be given to the Americans eventually. So in a way, it's a more heated environment, but still, I guess, cool heads can prevail.
Since you mentioned the trade war between China and the U.S., what are the Europeans reading of what is happening between China and the U.S.? Is it a good thing for Europe because maybe you can use this as a leverage to have a better deal with the Chinese? Or do you think this will go down and everything will be dragged into it.
No, it's a disaster, and then nobody wins. If two economic giants battle, and battle to an extent which we have never anticipated. Decoupling is the word, not just on trade side, but also on the tech side, and also now possibly on the financial side. This hurts the supply chains, this hurts us. We have no benefit out of this because we happen to be Europeans.
Can you give me an example why that hurts Europeans?
Yeah, I mean, if, for example, you have a plant to be built in South China, like I do, then you want equipment from all over the world, but now all of a sudden you might not get the export license from the US in order to build this plant because it has certain components in there that Washington doesn't want. So my choice is getting more limited. And then, of course, the marketplace. Who do I sell? Is that company restricted by US import tariffs or US import conditions? It disrupts everything. And it looks like it's going to be deep and will last for a long time. No, there are no winners in this war. And Europe has to see how they manage to muddle through, basically.
Yes, as you said, this will hurt globalization and will have its impact felt in every part of the value chain. But how do European businesses prepare and plan if there is so much uncertainties ahead?
Well, first of all, we have to focus on the market that's relevant and important to us. China is 30% of global growth for the next 10 years. So we have to be here. We have to be here in the smart way. We have to be here that we are not challenged by US or other places, regulations. We have to be in discussions with China on the investment agreement in order to make sure we can actually be part of this growth story. We're actually sometimes worried about the growth is there, but we might not be part of this. And then prepare. We do a study in September with the Chamber to see how decoupling is being answered. I really worry about that we have to have two systems. One is the Western system with our IT and our whole technology standards, and then one is the China system, where we have to have two island solutions. That makes, of course, everything.
Will that work? Decouple two systems in all areas, finance, trade, technology levels, internet,
I mean,
connections?
it's the worst solution possible. It adds cost, it adds complexity, it will slow down everything. It could be done, I guess, under huge cost. And I don't know if the world, the consumers, are willing to pay that cost. So no, we try to stay in touch. We need international understanding, WTO. We have to have a common understanding on to keep standards global and not to come up with the island solutions. So that's why we always plead with China on our position paper not to find own systems, but to link it to international systems.
And you said consumers will finally pay the cost
Always.
as a result of the divided world.
It's always the
probably
consumer.
consumers don't understand that yet.
Well, they will understand when they enter a shop. It's always two groups of people that pay for everything. It's the taxpayer and the consumer. And both will not be happy about decentralization, decoupling, all of the above. It's basically a kind of a tax on everybody's pocket. So I'm worried about this. We have to see this America first does not get into China first. And not into Europe first. This kind of island solutions helps nobody.
And do you think this is totally unavoidable? If not, what does it take from really coming into reality?
Well, it has come much further than I ever thought it would be. It's like we are crossing red line after red line after red line, China and the United States, which impacts us as well. And I don't know if there's an exit ramp. And eventually, we Europeans have to see how we fit into this thing. Are we getting bullied from China? Are we getting bullied from the United States? Are we having our own position? How much can we defend our own position? So, no, there seems to be, at this stage, no exit ramp.
That sounds very passive for Europe.
No, I think what we have to learn out of this is that I think our influence on the United States as well as on China is limited. We can talk, we can cooperate in certain areas. I think the only way of how to stay in the game is to fix ourselves. Reforms we have been talking about since years have to be done in the science area, in the educational area, in the regulatory environment, and I think that's what the Commission aiming to do. And maybe COVID even offers an opportunity because it's such a shock to the system that maybe people realize to be complacent these days is really bad.
Yeah. Let's talk a little bit about where Europe is headed. After COVID, recently Merkel and Macron met, and they come up with a huge European revival program, let's say, 750 billion euros program. What does that mean for Europe financially and economically?
Well, I mean, Europe is in a, depending which country you look at, that's the thing,
Yeah.
27 countries.
That's the problem.
I mean, Italy has quite
countries.
a debt challenge. Germany has been writing black figures since about a couple of years. Germany has deep pockets at this stage, but that's politically very difficult for the Chancellor to tell the population we have been very nifty, but now we have to spend in order to save Europe. But she managed this, and I think that's the important thing, is that for the first time I see some sort of solidarity that actually means a big chunk of this money is a grant. The countries that don't have to pay it back. And we hope that we don't have to go through this exercise like in Greece, where we sort of fought for every 100 million, and at the end the bill was much higher because of this. So I guess that it is a starting sign, but everything boils down to implementation, of course.
But do you think your home country, Germany, is already coming to agreement with Merkel's plan? Because Merkel, before that, he was more a frugal politician, but why there was a change of tone, and considering the fact that she's leaving office in some years, will Germany really come on board?
Well, they are on board. I mean, still our parliament has to say yes, as does the Dutch parliament. I mean, the Dutch have been very tough on the negotiation side. We have to see in our democratic setting if everybody agrees to what has been talked about. But I guess that for Merkel it was clearly she's very good in times of extreme crisis. That's when she really comes out of and leads and sets an agenda, and she has done so in 2008, and now she's done it again. So as a matter of fact, while we thought she's a lame duck going into her last year, actually she proves to be I wouldn't say a beautiful swan, but definitely something that has been leading Europe, and now she has even the formal leadership.
And another thing is that how those amount of money will be spent. Will it only be spent to cope with the aftermath of COVID, on social programs and welfares, or, as you just said, will be put into investment, research, and science development, which is the backbone for future growth in Europe?
I think that first of all we have to protect people that really struggle with everyday life. I think that really we have to safeguard that we have a demand story coming, that people are not falling off the cliff and are so poor that they can't buy. We need people that spend money, and if they don't survive this crisis financially, then we are challenged. No, it has to go in future technologies. It has to go into everything that goes from new energy to new materials, 5G, for example, in other areas. Europe has been too complacent for too long, and maybe now the kind of urge to spend, and we have the money, we have the political commitment, maybe helps us to get out of the chair and get things done. It's I don't know, we still can fail. There's always this opportunity, but I guess for this time being, I think that Europe for once really gets it going.
Where do you think Europe should be standing in terms of technology when you see such fierce competitions between China and the US?
I mean, in a way, we should learn that competition is a good thing for us. We should really learn how to fix our system, the educational system, the scientific environment, regulatory areas. We should spend money and maybe learn from China there on future technologies. So far, it was left to the marketplace, to the market actors, in order, for example, to look into energy vehicles and other areas. Maybe we just have to be a little bit more interventionist in order to make sure that we are on top of the future materials and products.
You talk about interventionists. Does that mean that the governments of Europe will be more involved in
I think so.
economic and industrial policies?
Yes, I guess so. In the sense that they have to be stimulating. I mean, that's the magic about China. The government is all over
Which
the place.
Which is the thing you complain about earlier.
We learn from the best, maybe. So you have the demand story, you have the subsidies, you have the enterprises. We will not copy that system. We cannot. Our system is different. But we have to have a system that generates trustworthy growth, that we know that there will be the demand, say, for energy vehicles or for other areas, artificial intelligence and so forth. So in a way, we have to see our government has to be a little bit more engaged in creating an environment where our companies can actually trial and error and kind of see what it has. So far, it has not been really possible. So yeah, in a way, I think the German Minister of Economics says that Germany will be far more hands-on as a government in the economic seat without telling companies what to do.
Where does China fit in this plan?
Well, China fits perfectly for us because in a way it's, again, 30% of global growth for the next 10 years. Secondly, it has still a long way to go to catch up. GDP per capita in most areas is very low, so there's a still growing demand story. And then, of course, the Chinese consumer, you know, very picky, very challenging, very demanding, which is good for our products. You know, you used to have a population in big urban cities that goes by price always. Now there's a real shift to quality. And we learned from the Chinese customers. If you look in the car industry, the cars built here are definitely more high-tech than the cars we built in Germany because the consumer not only demands it, they pay for it.
Yeah, I actually feel it because I drive cars, Volkswagen or BMW. Those cars that are made in China are different from those European versions because the Chinese customers demand different things.
Mercedes-Benz. The average age of the first-time Mercedes-Benz buyer in Germany is 53 years. In China, it's 35. And the majority is also women. Totally different consumer demand story. And Chinese are by nature gadget savvy. You know, they would love to have more electronics.
And very welcoming.
And the Germans are more fond about the motor not being seen, but very reliable in the font, you know, and so forth. So there is a real cross-fertilization between customers here and customers that we have, and that helps us in order to come up with the great products that these companies bring to the market right now.
Market access. I know market access is the complaint from many European businesses about China. But the Chinese probably asking, if there is limited market access, why there are so many European companies already making success stories?
Well, if some make success stories and make money, doesn't mean the others don't want to be part of that. It's even the opposite, actually, because some are, like the car industry, chemicals, so successful here. The others actually want to break through and actually get engaged here in banking, insurance, and legal services, and so forth. I mean, after all, when you look into our position paper, which is always a solid 400 pages, we have 800 case studies in there showing where we actually want to have more access. So we are trying to document it and also outline where the advantages. No, we are successful in some areas, some companies, but not in all. And that flies in the face of the fact that Chinese companies in Europe have far less regulatory obstacles and hurdles to do. Trade also, it says a lot. China sells 1.1 billion euro of products every day to Europe, and we sell 500. Certainly, we like Chinese products.
You think it is a market access problem? It's not a structural problem because we produce and consume different things.
Well, I mean, we would have very good strawberries and cherries. I mean, we go into Eastern European countries. They would love to sell the agricultural products. They don't have the Mercedes-Benz and BMW, but the sanitary conditions in China are so tight. You might call it protectionism, that they can't succeed there. That's one of the challenges in 17+1, that actually Eastern European companies in particular want to sell the products they're good at, high quality and high-end food products, and they can't really do that.
China and Europe wants to sign an investment treaty. That means both sides want to invest in each other.
Yes.
If you are an investor, you invest here in China, what do you think needs to be changed primarily for you to have confidence investing here?
I mean, normally, the normal pattern of European business in China is we invest greenfield. We don't buy into companies. We actually create new jobs, new business. Chinese companies, by the way, always buy into existing operations in Europe. We don't need these kind of greenfield maybe there. But there is a huge chunk of new investment opportunities. Now, do we get the raw materials, for example? There are so many SOEs, monopolies that might not sell this to foreign investors, for example. Do we have the marketplace? There is in healthcare, for example, always this thing about even a joint venture here cannot sell scanners into Shenzhen because it's not a domestic brand. So these kind of things make investment difficult because we're not sure, can we sell it or can we not sell it? And that's what our
But the government's pledge is very clear. We want to offer a level playing field for all companies, foreign or domestic or joint ventures. But you're saying they only talk the talk, but they do that.
Well, I mean, the government's intention is clear. That's what their end game is, and that's what they plan to do. But there's a long way, and there has been many of these kind of statements. We call it promise fatigue. We heard it many times, and we are sort of realizing that they don't walk the talk. So in a way, there's a lot of potential for actually closing this gap. And you know, if European companies, foreign companies, for example, in Shanghai, are very successful. Shanghai, I think, 1/3 of their tax income is from foreign companies, and you have 25% of GDP by foreign companies. So in a way, if you just look at Shanghai, the success story, it could be replicated in many cities across China, but there's always this local protectionism. The World Bank years ago made a survey to see that China actually is like a European Union without the trade-free zone that we have, because there's so much steel only for Henan, then there is so much aluminum just for Shandong and so forth. No, there's a huge GDP growth potential by knocking down these borders. We are in the same boat of, for example, like the private-owned enterprises in China that are underfunded, market access problems because of the SOEs. In many ways, we understand the challenges, but we hear the good words. Now we want them to be implemented by getting us and the private Chinese enterprise the same market access as the SOEs, for example.
And do you think we're on the right track?
The slow boat to China, I would say. It takes a while.
Okay, let's also talk about the Chinese companies running in Europe. Huawei. Huawei is having a big problem now in the United Kingdom. Of course, UK is in its own Brexit process, but still Germany, France, what will they do about Huawei?
Well, France just changed, basically said to Huawei they cannot install something, I think, in a couple of years from now. So basically, Huawei has to a large extent, exit the French market. Germany is still undecided. They keep the market open. The government still has not made any move of keeping Huawei out. Our telephone companies want Huawei as a choice. So we have to see how that works out. I would say the biggest problem for a very company like Huawei is just the political noises around it that actually really comes from the American side.
It's no longer a business decision.
No, because I mean also, frankly, the marketing skills of some Chinese diplomats was not very good by threatening the host country. If you don't buy Huawei, then we're going to threaten your business in China. This doesn't help. Huawei doesn't need this. It's a fantastic company with great products. Now, always claiming that they're a private company, but now with this political help that comes from Beijing and other places, it has been put in a political box.
But do Europeans, or do you share the idea that Huawei actually poses national security threats to Europe?
Well, I'm not a technician. I don't know. I mean, my own country, they basically, our security guys said that the hardware is without challenges, should be fine. The software is apparently the challenge. The uploading every week or every 2 weeks that can give someone the opportunity to put on software that can spy. But again, you can supervise that. You can actually scan it. So I don't know. I'm not a technician there. But the fact is that Huawei is put in this corner as a possible spy organization. That taste doesn't go away.
Because probably many Chinese business people worry about the bigger picture. Is Huawei an isolated case, or it will probably become poisonous for all Chinese businesses operating in Europe?
Well, again, China sells 1.1 billion euro of products to the European Union every day.
I do not
so in a
mean
way
products, I mean investing in Europe.
Well, I mean, Huawei is selling 5G
but
kit.
also running their services.
Yes, I mean, they have huge R&D facilities in Germany, for example. And of course, if you are investing, if you want to sell to a country, you have to invest in many cases. And that's the hope that we had, that Chinese companies actually are not just selling, but actually investing in Europe. But in this case, it has been politicized. But again, the figures speak for itself. Europe is extremely open. And Huawei, in a way, is, I think, not setting the stage for other Chinese companies.
I have to ask you some politics.
Right.
Yeah, because China
passed
the security law for Hong Kong, and
yes.
There are a lot of oppositions voices heard in the United Kingdom and also from the European continent. Do you think this will pose a threat to businesses running in Hong Kong and also those businesses in mainland China?
Well, to start with the positive end, I think mainland China business is not really impacted, but the Hong Kong business is. We should not kid ourselves. If you look into the chamber results of AmCham, German chamber, and so forth, companies are highly irritated. And so now, I think, as the new law is in place, the implementation is key. If there's going to be a real stifling, if there's going to be a crackdown on independent analyst reports, for example, independent reporting on mainland economic activities, then you will see people are voting with their feet. So yes, it has a significant, I think, negative impact in Hong Kong, no impact in mainland China. It's like if there are two different worlds.
But people always regard Hong Kong as a contact point
yes.
between China and the West. Behind it, of course, America, in terms of finance and services. So in a sense, it is has a symbolic meaning. Do you appreciate that?
Well, it's not just symbolic, it's real. I mean, it's the Hong Kong dollar is the only freely convertible Chinese currency.
And it's pegged to the US dollar.
And it certainly is pegged in order to give confidence to people. And it has worked very well over the last 40, 30 years. Hong Kong has this cluster of brains in financial knowledge, in services, and so forth, which cannot be replicated anywhere anytime soon. So that's why it has to be safeguarded. It has to be really understood that Hong Kong is an entry point not just for China but for Asia. And there are two entry points, Singapore and Hong Kong. And if Hong Kong is stifled and Hong Kong loses its advantage of free movement of people, free movement of information, free movement of goods, then of course it will drop out of this rank of preferred
Do you think
places.
it will happen?
There's a risk, and I think China should be aware of that. It's a fragile thing by now.
America. In 4 months' time, there's going to be a presidential election. And a lot of people are saying this will be a very consequential election for the world. How do you see it?
Well, we knew 4 years ago it was a very consequential elections. We couldn't believe our bad luck of getting this president. I hope this is going to be consequential in the sense that we have a new leader. Another 4 years, I'm not sure the world can take that. We need a change in attitude, in embracing America first has led us into a dead end. So I guess the American people really, in many ways, have the fate of the world in their hands on November 3rd. So there has to be something happening. We look at this and we hope that reason will prevail, really.
All right. On that note, let's wrap up our interview. Thank you very much.
Thank you very much for the opportunity.
Thank you.